Is it good news or bad news? It's difficult to tell at the moment. The UK employment figures released this morning came in slightly better than expected, but they still show a negative move in the jobs market. And this is of course just as it's been announced that more areas, including London, will be entering Tier 3 lockdown restrictions. So let's catch up on what's been going on. Hey guys, it's Nicholas and this is Market Movers, where we cover the news that's been moving the markets. So expectations for the UK jobless rate for October were at 5.1%, but instead the figures released this morning came in slightly below that at 4.9%. So that's obviously good news. However, that is up from the previous figure of 4.8%, so it does mean that more people are becoming unemployed. And this is reflected in the number of redundancies, which hit a record high of 370,000 people in that same period. As you'd expect, the hospitality sector was the worst hit, making up a third of those job losses. And to put all of this in perspective for you, that means it's 819,000 people since the start of the pandemic who have now lost their jobs. So of course, with almost 1 million people now out of work who were employed before all of this began, there's going to be a lot of pressure and criticism on our boy Rishi Sunak, the Chancellor of the Exchequer, because many people believe that he acted too late to put measures in place to support jobs. Like for example, during a lot of this period that's covered by this morning's data, it was looking like Sunak was not going to extend the schemes that were due to expire on the 31st of October. So you can imagine the sort of uncertainty and pressure that created for employers and how that led to redundancies. And now, just like I mentioned in the intro, we're seeing many more areas of the country heading into Tier 3 lockdown restrictions, which is the strictest tier. So that puts 10.8 million more people into Tier 3. We already saw recently that the jobless rate was expected to rise to 7.5%, so I think tough times are still to come. Now, there was an interesting article by Martin Wolf in the FT which summarised the government's position nicely. That was a bit earlier in the week. So he points out that the government right now can borrow at a real rate of -2%, and they need to make use of that. A paper by Summers and Stansbury at Harvard argued that no monetary policy right now can deliver full employment without dangerous side effects, including financial instability. So fiscal policy is the only sensible option. And in fact, another paper shows that monetary policy can't be effective anymore at all. So even if the Bank of England choose to take action, it's unlikely to have the needed impact. So this, along with the fact that a no-deal Brexit is expected to make GDP and the jobless rate even worse, means that the ball is firmly in the government's court right now. So we'll be keeping a close eye on what happens with their fiscal policy and, what the government does from this point onwards. But what are your thoughts on this? Has the UK government taken the right approach so far? What have they done wrong? And how has this affected your own personal situation, your own employment? Let me know in the comments. And of course, if you found this video helpful or interesting, please do hit the like button and share it with anyone else who might want to stay informed about this topic or any other market moving news. I really appreciate you watching. Take care and I'll see you soon.